What's up, everyone? It is your boy TTFX in another video. So on today's video, it's going to be a educational one where I'm going to go through. First, I'm going to start with introducing the high probability setup. What is the high probability setup? How to spot it, where to spot it, and how to trade it, and all that stuff. So it is, to be honest, these high probability setup trades are really like the most trades that I take since I started trading smart money concept. Because like for me, I tried them all, like the trend line strategies, the support and resistance. I use it indicators and all that stuff. But since I knew the high probability setup and I started working with it, it is like for real changed everything about my trading style and everything about that. So I'm gonna go through all of this. I just don't want to talk about anything. We'll just go to the high probability setup that the trade already took today that I'm gonna be talking about. But before we start on it, I just want to show you a drawings that I already made to introduce you what is the high probability setup. So let's start with opening this one. Yeah, so a high probability setup. It is this setup. I'm gonna just try to explain it for you guys step by step, and then we will go to the chart. So the first thing you should have is to know where your structure is going. So if you can see over here, we have a low, a high, a lower low, a lower high. So we are now in a downtrend, okay? You just keep marking your charts, like except like imagine that this is not here. You just keep marking your chart, lower low, lower high. You always try to mark the last lower high if you are in a downtrend. So you always mark the lower high. This is our lower high. Okay, we made the lower low, lower high. So this is our lower high. And then we moved to the downside, but then we didn't respect this lower high and we break to the downside. No, we broke it to the upside, making what? A break of the structure. So this is the first step of a high probability setup. You need to have a break of the structure. We flip the structure to the other side. Like if you're going on a downtrend, you're going to break it to the upside. If you're going in the uptrend, you're going to break it to the downside. So the first thing you're going to have is the break of the structure to the upside. So that's, you mark your break of the structure. That is the first step. The second step you need to see is forming liquidity. So like guys, if the liquidity in here, I just like draw it as a line. You can find it like at many lines. Like, let me explain to you what I mean. Like you can find it like this. The structure do this down and then do this and then start going higher. It's not gonna just respect and like do just one move. Just let's, for the sake of the video, I just wanted to explain it like so simple for you over here. And then we're gonna go through the charts and we may see another schematic. So after we had a break of the structure, we have the liquidity. So after, you need to mark your liquidity after you see some pullback, like you had the liquidity and then the price starts going higher, then you need to mark your liquidity. But if the price is keep doing something like this and going lower, it means two things. We're not going to have the liquidity and we're going to do a higher low, which is this order block, and we go higher, or the liquidity is going to be lower. Like the liquidity might be go to the 50% and then go higher. So you need to see liquidity. The third thing, after we made the liquidity, you're going to see a push to the upside, which is going to manipulate people that the liquidity is the real structure. Because if you can see, we had a higher high, higher low, and this is the higher high. But meanwhile, this is not the higher low. This is the liquidity. And that's why after a break of structure to the downside, a lot of people are going to be waiting to buy from here, which is wrong. You need to be buying from here because this liquidity is going to be manipulated and going to be taken by the institutionals. And then we push to the downside, we test the order block, and then we go higher. So yeah, I missed a step, by the way, guys. I was just going to try to say it again. So before the liquidity, after directly what you need to do after the break of the structure before you form liquidity. After every break of structure, you need to take this zone from the low to this point that broke the structure over here, like from here to here. you look for your order block. Okay, over here you look for your order block, which is the last down move before the up move, a bullish in a golden candle. You look for it, and then you mark it like this one. Like is most of the time it's going to be over here or up of it a little bit. So that's the point that you're going to be entering on. Okay, and after, like we said, break of the structure, you mark your order block. We have liquidity, you mark your liquidity, and let's assume the price is now at the higher high. All what you need to do is just put a alert under the liquidity, and as soon that the price hits your alert, your line, you open your chart and you wait to see the price react within this zone. And if you're on a lower time frame already, you just like enter your trade whenever you want, like on the top of the order block, on the middle, or before it, and you put your stop loss under this low with 1 pip maybe. And if you're on a higher time frame, you don't just get directly, you need to go on the lower time frame and look for the same as this one, and then you enter. But let's assume now we are already on a lower time frame, because like I don't want to make it a little bit complicated for you guys. So I just want you to be familiar with the high probability setup, and I just want to show you how to trade it. Okay, so after I introduced you to high probability setup for a buy trade, no, not for the sell trade, now I'm gonna take you to the chart and explain for you how I took this trade. So it was on GJ. Yeah, GJ, we go to the 15-minute. Okay, so we go to the 3-minute. Okay, so what we was talking, we look at the structure, we mark the structure until we find the break of the structure. So you already see it over here, but let me just take it out. So we start marking our structure. So if you can go with the lines, it may look for you easier, but let's stick with the candle. So we started going low, lower low, lower high. This is the last lower low. This is the last lower high. This is the last lower low, lower high, and this is the last lower low. So before this lower low, we had a lower high, which is this one. So we take all of this off. Okay, we delete all this. And we stick with this one. Let's go to the 1-minute time frame. So it's a little bit better to see it on the 1-minute time. So we made this lower low, this lower high, and then the impulsive move to the downside. Then all what the market did is broke to the upside. It broke this structure. So let's delete this one, and we made a line with a break of the structure. So we break this structure to the upside. Okay, break of structure to the upside. Let's go back to the picture. Yeah. So I want to see just a second, back a little bit. So as you can see, we was marking our structure to the downside, which is the lower low, lower high, lower low. Then as soon as we get the break of structure, which is this one, we mark that line, which is the break of structure. Now we're going to look for what? The old order block that broke the structure. Before we look at the liquidity, we need to look for the order block. That's exactly what I'm going to be looking for. So if you go on the 1-minute, we need to see less push to the downside before pushing to the upside, and meanwhile broke structure. So we can start by marking this one because it was never mitigated. If you can see, we made a higher high, a higher low, and this we didn't break the structure to the upside, we didn't broke to the downside, and then we broke to the upside. This one was mitigated, and this one on the 1-minute, it is too small to be honest, so that's why I did pick this one on the 3-minute. 3-minute over this one. Yeah. So the second thing we did is we marked our order blocks, which is, as I told you before, we may find one on the downside, and we find it a little bit higher, which is like these two ones. It's a little bit higher. Now after that, we need to see where the liquidity is formed. Okay, and we mark our liquidity. And as you can see, this is my liquidity. always like we go to the 1 minute, so I think it's easier to see it. If you can see, we made like, it looks like it is a structure, right? So we made lower, lower, high, lower, low, a higher high, this is a higher low, and this is a higher high, this is a higher low, right? But meanwhile, this is not a structure because this one didn't mitigate these older blocks to be respected, because this was just the liquidity that pushed to the downside, and then to manipulate the people who did sell from here. And meanwhile, it's going to manipulate later the people who did bought from this liquidity. So we did mark what our break-up structure, our order block, our liquidity. As I told you, after this, all what you need to do is to put an alert in here and wait for the price to hit to come to your entry and then enter directly. Since we are on a lower time frame, okay, let's go to the 3 minute. Since we are on the lower time frame, we don't need to look for more confirmations to enter on these trades. And in these trades, you could have made, just a second, let me put the second trade if you could have entered on it. By the way, I put it, the stop loss under, usually I do put my stop loss under this low. If you can see, I mark it over here, the stop loss. But if you go on a higher time frame, you can see I have this low. The blue line, it's for a all of the low. That's why I was waiting to buy from here, because this low, there must be unmitigated order blocks that need to be mitigated. And that's exactly why the price it went higher. It mitigated this one, and then we went higher to mitigate the higher order block to go lower. So let's go back to the 5 minutes. So you could have had two potential entries in here. Okay, the first one is on the 1 minute order block with the stop loss of 11.5 pip stop loss, and your trade will hit 11.26 risk reward ratio, 11.25 risk reward ratio in I don't know, to be honest, how much time it took, like from here to here, 2 days. Yeah, just a second, guys. Because yeah, so yeah, 13 hour, let's say 14. So in 14 hour, you made 11 risk reward ratio. Like if you risk it 1% in here, you could have made 11% on your trade on your account. But I do only risk 0.5, and I didn't enter on this 1 minute trade. I entered this one. I risked 0.5, which made me 3% on my portfolio. So I just I don't want to talk about that right now. So let's go back to the trades. If you can see, guys, it is the same as you can see down here. We had liquidity. We have a break of structure to the downside. We had a break of structure, as you can see over here. We had our two demand zones in here. By the way, guys, when you have two demand zones like this, it's up to you. Where do you want to enter? You want to enter on the first one or on the second one? Or you can just enter on the first one, and you like I did over here. I put in my stop loss under this one. I entered on the first one, but you can just like forget about the first one and wait for the second one with a better high risk reward ratio. Because if you can see, it's almost the double of my trade, 11.2, and this one is 6.9. So it's almost the double. The better entry you find, the more risk reward you're going to have. So it depends on you if you're like want to enter on the first or on the second zone. And after the reform of liquidity, the price tab at 1 hour zone, and if you can see that reaction and the impulsive move, how the price went all the way up to our this zone. Okay, and if you can see right now the price, how it reacted with this supply zone, and I may look for the same in this zone. I'm going to be looking later. I'm going to be going on the maybe 15 on the 5 minute. Okay, the same as we did in here for the buy. I'm going to do it for the sell. I'm going to wait for the market to shift the structure to the downside, and it may be already happened, because if you can see, this is a higher high, this is a higher low, This is a higher high, and then we broke the structure to the downside. If you can see, we're in this one. So we may look, or we may find the order block in this candle in here, and this gonna be our liquidity. We may see the price push a little bit more to the downside, go back, mitigate this one, and then the price go lower. You see, guys, it is really a great setup, easy to spot, and it gives you a high risk reward ratio. This is the most profitable setup. I do use it, except Wyckoff and all that stuff, because I already use Wyckoff schematics on my trading, because sometimes you don't have a clean break of structure and stuff like this. So it pushed me to go and look if I have a Wyckoff distribution or accumulation, sorry, or a redistribution. And that's it, guys. Yeah, that's it. And before we end this one, let me just show you. Let me go with you in this one and look for sales. We may I may post the what happened later on the video. So okay, let's go on the 3-minute. Okay, so we had a higher high, a higher low. So this is our last higher low, higher high, and we break the higher low, which is this one. So we mark a break of structure to the downside. So after we had the break of structure, we look for what? For the order blocks. So I can see that I have this one in here, and I'm gonna check it on the 1 minute. Supply zone. I want to see what do I have on the 1 minute over there. Well, we have a better one. I'm just gonna mark it, but I really do not like to trade in minutes. I just don't like it. Okay, 3 minute is like so good for me. Okay, so we have a 3-minute order block inside it. We have a 1 minute order block. Okay, we go back to the 3 minutes. So we had our break of the structure, and we had our liquidity. Sorry, we had our order block, and now we're gonna look for the liquidity. If you can see this liquidity in here, it's this zone in here. If you can see, we have like the people who trend support and resistance, they're gonna see this one in here. Even trend line, it can be looked as a trend line, and you can mark it as a okay, they're gonna be sellers from here for sure. Because if I did see it, a lot of people are gonna see it and gonna be shorted from there. And they are already in profit right now. If you can see, they are making profit, and they are like, oh, okay, we are right, and all that stuff. They may be at break even right now. Some of them is still didn't move his stop loss, because if they're gonna be entering in here, let me just bring the trade line. Let's assume they entered in here, 2 places for the stop loss. They're gonna be putting their stop loss in here and targeting the lows, or stop loss in here and targeting the lows. Well, if he is like a better trader, he may put his stop loss in here. Okay, so this is our liquidity. Liquidity to the upside. Okay, so this is our second schematic for the high probability setup. Okay, and just a second, let me yeah, here it is. If you guys wondering how it is, if you can see, we was looking for the higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, and then we got the break of the structure, as you can see, this one in here. After the break of the structure, we look for what? We look for the order block. Again, over here, we have a 3-minute order block inside it, 1 minute order block. We had our liquidity, which is this one. The price is moving to the downside. Now, 2 things are gonna happen. The price is gonna keep pushing to the downside, okay? Give the illusion that a lot of people are right, and when the price is going back, they're gonna be looking for sales from here, and the price gives them a small reaction, push to the upside, take off all the people that sold in here, mitigate this one, and then go lower. Or the price is gonna just respect this order block. If you can see, we have a small order block in here. The price is gonna go higher right now, give us a small reaction, test our order block, and then go lower. And the third thing, which is like it can happen, the price just do something like this, and then it keeps going lower, and what it did is wrong, because you're not always right, guys. And what I'm saying over here is like what I had by experience, not because I said the price is gonna come back, it means it's gonna come back. No, it may come back, it may no, because we are not the ones who move the market, you know. So I'm gonna take this one off. But the thing is, I'm going to be looking for sales. If the price came back in here, my entry will be in here. If I'm going to put a sell limit, that's my entry and that's my stop loss. But I may manage to go on the 50% of the order block and my stop loss in here with 6.6 risk reward ratio. And if it tapped on our last level low, I'm going to be making 5.3 risk reward ratio. But you can see, guys, it is so easy to understand and so easy to market on the charts. If you target this low, you're going to be making 12 risk reward ratio. If you're going to be targeting the higher time frame low of the old structure, you're going to be making 20 risk reward ratio. So if you risk 1% in this trade, you're going to be making 20% on your account. Okay. And yeah, I'm going to keep you updated with what happened on this trade later. I'm going to be posting it maybe on the Telegram group or even on this video. Before the video end, I'm going to be posting for you what happened on this trade. And I'm just going to take a screenshot for it right now. So later I can show you the before and after. And that's it, guys. This was the introduction of a high probability setup. We had a buy example, we had a sell example, and you can get more and more about the high probability setups, how to use them on the higher time frame and how to use them on the lower time frame for confirmations. On our Discord group is where I do teach you over there, and we already have a full course about the supply and demand zones, Wyckoffs, and market structure. All what you need to do is to join our Telegram group. I'm going to be posting the link down below. When you join the Telegram group, you're going to find a pinned message. On it, you're going to find everything that I offer you on the Discord group. And if you are willing to join, all what you need to do is just to contact me on the Telegram, or you contact me on my Instagram. That's where I'm almost active most of the time. I'm going to be always also posting the link down below. It's TTFX mentorship. And yeah, for any of you who have any question, you can just ask me on the comments. I hope you guys liked the video idea, because I already wanted to show you this video for a long time ago, just didn't have time to. And there are going to be a lot of other videos, content, educational ones, where I'm going to be talking about the liquidity, how to spot it, and market structure, how to market, and Wyckoffs, how to spot them, how to know if you're in a accumulation or a distribution, and all of that. I'm going to be posting them soon. Just I want one thing from you guys. If you really like what I'm showing you over here and you like the content, all what I'm asking for you is just to subscribe and like the channel so you can stay updated with everything I do post. I already post weekly technical views every Sunday. I show on them my weekly view on my watch list. So if you're like having analysis that you want to make sure that they are wrong, or you have some missing things you didn't understand on the market, you may find the solution on that videos. I already post them every Sunday. And I really thank you guys for watching this video. And if you get to this point, thank you a lot. And that's it for today, and see you in another video. Take care.